There is something very peculiar going on right now. We have the stock market dropping, we have the dollar dropping, but you have gold and Bitcoin going up, and some altcoins also starting to wake up and look really, really good in terms of their high time frame daily charts. So in today's video, I want to discuss exactly what's happening in the market. Why are we seeing stocks dropping whilst Bitcoin is pumping? And what could this be signaling in terms of the next move for the market? I believe there is a very interesting dynamic at play right now, which we're going to discuss because it's something that hasn't happened in a long time. There have only been 3 occasions in the past 7 years where this has actually happened. And I want to run through those occasions and talk about why this time may be different. So, without further ado, let's get straight into the video. Firstly, the S&P falling off a cliff pretty much over the last couple of weeks. Obviously, we had that big drop, then we had a complacency bounce, and now it's giving up a lot of its gains again. I think a lot of this is off the back of the fact we haven't seen that many tariff trade deals, and the market did rally on the news that we were likely going to see trade deals. As you can see in front of you, the S&P is down 12% in its first 74 trading days of the year, the third worst start to a year in stock market history. So we have equities selling off. You also have the US dollar going down. But interestingly, whilst the equities are dropping across the board, specifically US stocks and US tech stocks, you have Bitcoin increasing. It's up from a local low of 83K over the past week, running up to 88K. If you want to look at the monthly local low, we went as low as 74K, and now we're pushing the previous 90K range low again. So why is Bitcoin responding so positively and looking so strong in the face of adversity? Well, that's something that we're going to discuss later, because as Rand points out here, you shouldn't be discounting just how pivotal this Bitcoin decoupling from US equities is. And as I mentioned before, it's one of 3 occasions in the last 7 years that we've seen this. So this doesn't happen very often, and it does have a deeper meaning for us as investors, which we are going to talk about today. You can see it here in the chart in front of you. Bitcoin up over the past week, 5.67%, with the S&P going down 3.25%. So a discrepancy of almost 9% there. This is quite a substantial spread, and there are some very interesting correlations that we're going to have a look at later on the Pearson correlation coefficient, with Bitcoin's likeness to gold actually increasing. And we know gold is in a big bull run. So let's talk about it, and let's get into what it means for the market and why this time may be different versus some of the other times in the market where we've seen similar price action. So before we get into it, if you actually want to win a Bitcoin, we have a very cool lucky spin giveaway happening at the moment where you can win an entire Bitcoin now valued at $88,000. All you need to do is sign up for a new Weex account. They're one of my new exchange partners, using the link in the description. Open an account, and once you start trading, you can earn spins. You get 1 spin for 10K in futures volume. That's not a lot of volume considering it also includes leverage, and every volume increment that you earn more spins, which is amazing. And when you actually sign up for the exchange, you get a coupon just for adding your email and phone number of between $10 to $100. It's randomized. And then if you deposit into your account, you can get a $4,000 bonus. Depending on how much you deposit, if you only deposit $200, you get a $20 bonus as long as you hold it in your account for 3 days. And then as you trade, you can unlock bigger bonuses up to $8,100. So 3 ways to make money. Firstly, depositing, just keep it in your account. Then you can withdraw if you do want. That's the first way to unlock up to $4,000. Then as you start trading, you can start to spin to potentially win 1 Bitcoin, which is the subject of today's video. We're going to talk all about Bitcoin and the decoupling today. And then as you keep trading, if you do enjoy the exchange, I think it's got a great user experience and lots of new altcoin pairs launching there, then you can win up to $8,100. So link in the description to Weex. It's non-KYC, so it should be quite easy to open up an account and at least claim some of those initial bonuses. Even if you're not going to trade there long term, you can just take advantage of the pretty big giveaway that they've given exclusively to me and my audience, which is absolutely amazing. All right, to fully explain the context of what's happening with Bitcoin right now, let's firstly look at gold. because this is really what's driving the market at the moment. We're seeing a flight to safety. So investors are very scared, or at least uncertain about where equities are going to go under Trump. They're uncertain about what's going to happen with the tariffs. And whenever there's uncertainty in the market, whenever there's fear in the market, especially when the dollar's dropping, investors get defensive. Now, if you have a lot of US dollars, you've got a few options. You can try and hedge against the downside by investing in treasury yields, but the dollar could, keep dropping. It's already dropped, I think, 10%. It could drop another 5 to 10% this year. So I think in order to protect capital, a lot of investors have been shifting into gold and Bitcoin, which we'll get into in a few minutes here. Now, I actually made the decision a couple of weeks ago, if you've been watching my content, to also shift some money into Bitcoin and gold, and actually equities, which ended up bouncing. And as I explained in 2 videos ago, I ended up taking profits on those equity trades. But my gold buys are up really nicely, over 10 to 15%, which is not something you expect on gold in literally a matter of 2 weeks. And the reason I shifted money is because I was holding a bunch of stables, and I was like, look, I can't just hold all my money in US dollars when the US dollar just keeps dropping. So let me shift a little bit into gold. This is the US dollar chart in front of you, to protect some of my capital. And I think this hedging is one of the reasons during a time of major uncertainty for the US dollar and equities why gold just keeps going up and up and up. There's also lots of rumors that China's buying a bunch of gold, and overall the world's got the gold bug, because during times of uncertainty, gold does really well. Now, during times of certainty, risk assets do really well, and stocks do really well, and in high liquidity environments, altcoins do really well. But right now we're in an uncertain market, and that's why you're seeing gold do really well. Now, typically, you'd expect gold to go up, and you'd expect stocks to drop during times of uncertainty, which they are. And because Bitcoin is correlated to tech stocks, you would also expect Bitcoin to be dropping substantially during this period as well. But that is not what we're seeing. We are actually seeing Bitcoin going up alongside gold, which is quite peculiar behavior that hasn't happened many times, as I discussed, over the last 7 years. So the first point I want to make here is that, firstly, gold as an anchor for Bitcoin going up is very, very good. So gold skyrocketing is bullish for Bitcoin as the overall ceiling for Bitcoin increases. I personally got into Bitcoin through reading the book by Saif Dean, which was the Bitcoin Standard. And that was a fantastic introduction to Bitcoin, which explains how, in many ways, Bitcoin is a digital gold, but even better, due to the fact that there's constricted supply, unlike gold. It's much easier to transact, faster, more efficient. You can, have sovereignty, and it's divisible with Satoshis. So there's, many benefits that Bitcoin technically has over gold, and over the long term, you expect, and it has over time, actually eaten into gold's market share slightly. However, proportionally, percentage-wise, Bitcoin has actually been decreasing versus gold, not because Bitcoin's been going down much, just because gold's been going up so much. And you can see gold going from an $11 trillion asset a couple of years ago to a $22 trillion asset, whilst Bitcoin is now at a $1.7 trillion market cap. So there's a big discrepancy now of around a 15x in the gold market cap or like a 13 to 14x rather, from Bitcoin versus gold, whereas even just a few months ago it was only a 10x. So this discrepancy gets bigger. But ultimately it's a good thing, because gold's going up, because Bitcoin's in many investors' eyes is priced as a percentage of gold. It actually raises the ceiling for Bitcoin. It's the same thing as, when Ethereum pumped massively, it raised the ceiling for Solana and other L1s because people value them on a relative basis. And if you're looking for an alternative to gold, there aren't many assets in the world that can actually fit that bill apart from Bitcoin. Now, we'll discuss in terms of correlation whether Bitcoin actually does historically act like digital gold. Spoiler alert, it hasn't. It's been more of a risk asset. However, I'm not talking about what's happened. I'm talking about the market perception. And I think the market perception, even if it hasn't been historically, is that eventually Bitcoin will become digital gold. And that's why the ceiling on gold going up is actually very bullish for Bitcoin. But even though it's bullish for Bitcoin longer term, does that mean Bitcoin is a digital gold now? Well, let's discuss the correlation and the historical implications. So we know that Bitcoin has been gaining versus the Nasdaq and versus equities, but what we also know is that historically Bitcoin's been very correlated to the Nasdaq and the S&P 500. So if you look at this chart, this is the Bitcoin Pearson correlation chart. What this does is it maps out Bitcoin's correlation to other asset classes. So when the lines are really high here, close to a coefficient of 1.0, or when it gets up to 0.9, this is extremely correlated. And when it gets down to a negative correlation, so -1 being the maximum negative correlation here, that means Bitcoin is not very correlated. What we've seen historically is that basically Bitcoin has maintained correlation to equities since especially mid 2024. It's pretty much been correlated the entire way. And Bitcoin's correlation with gold oscillates not based on Bitcoin's price action, but mostly based on gold's price action. So you can see gold here goes up versus Bitcoin, then down, then up, then down, then up, then down, and its correlation oscillates whilst Bitcoin's exposure to risk assets or correlation to risk assets has been relatively stable. Now, what you can actually see if you want to go on to year to date is that we have the correlation with tech stocks peeling off a little bit for Bitcoin, actually all the way down to 0.48, while its correlation to gold, which was almost at -0.7, is now up to 0.3. And this trend looks like it's going to continue to the point where gold actually flips the correlation of equities. Now, this only happened briefly at the end of 2024, and the last time it's happened for a long time was during mid-2024. So we haven't had this in about a year's time where gold has actually flipped, which, I assume is going to happen. Its correlation to Bitcoin, which I think is a major thing because this only typically happens during very specific economic times, which I'm about to detail in a second. I like this post from Alo though. He says, nobody believing that Bitcoin would eventually decouple from risk assets seems like the precise setup where it's most likely. Because that's, been the perception. Bitcoin is a tech stock, and that's totally justified, right? Because it has been a tech stock. You can see the data in front of you. Totally justified why people don't believe in the decoupling, and it's been something people have been talking about for a long time, and then it ends up uncoupling. But I'll build a case for why this could change in the future very soon. Alo points out that he believes that Bitcoin will eventually rip higher as it further establishes itself as an asset that more investors recognize as having a very important place in the world where the US is sabotaging itself and sovereign debts are at record highs with growth looking shaky. That is definitely an argument here, like just to look really logically, first principles thinking a little bit, just reverse engineer the situation. Like you're an investor, right? You have a bunch of cash. You want to park it in the market. So, you put some money in gold to hedge against the US dollar a little bit. You have some money in dollars. You have some money in equities. But where's the middle ground? You have gold really defensive. And then you have, risk assets really aggressive and shaky at the moment. Bitcoin makes total sense as that middle ground between the two. It has, properties which make it risk on, aka when global liquidity is high, it pumps. When global liquidity is high, gold often drops as people rotate into equities. But it also has elements that liken it to gold as well in terms of its scarcity, in terms of the general perception in the market, which is one day it's going to become digital gold, which in my opinion kind of puts it in the middle of the two. So it behaves like a risk asset in terms of giving you upside when, liquidity is high, but it can behave defensively during times like right now, which we are currently seeing, which give it properties as gold. And I think the most powerful thing here for Bitcoin, and as an extension of that crypto, I'll talk about altcoins later, but, for Bitcoin specifically is whenever it reacts like this in shaky environments, the market builds belief. So the more times that Bitcoin reacts positively in the face of economic meltdown, the stronger its case becomes in the future. And it becomes a self-fulfilling prophecy. Now, I'll go through the data which I alluded to before in terms of times this has happened historically and why every time this happens, the case gets stronger. 2018, we saw a crypto winter decoupling. Bitcoin crashed while the S&P remained flat. The burst of the 2017 crypto bubble demonstrated that Bitcoin could follow its own cycles independent of traditional markets. This was a bearish decoupling. Since then, we've seen two bullish decouplings. In 2023, we've seen the banking crisis divergence. I don't know if you remember Silicon Valley Bank. When a lot of the banks crashed, Bitcoin was pumping. So that was an example of when people lost trust in the dollar and the fiat system, Bitcoin actually benefited from that loss in trust, or at least it was a trade based on that loss in trust, right? Now, we are seeing for a third time during this tariff trade war, as stocks are falling once again, we're seeing Bitcoin climbing. So once again, acting as a hedge against potential geopolitical and economic uncertainty. So it's only happened a few times. The first decoupling was negative, and then the past two decouplings have been positive. The more proof that Bitcoin can put in, the more evidence it can build up during times of economic turmoil that it can act as a digital gold, the more the market will shift its perception on Bitcoin and the better it becomes in terms of upside. Because I think for Bitcoin, the major price anchor is the gold market capitalization. And the more that the market thinks Bitcoin's digital gold, which I've always said eventually it will, it's just not there yet. And I still don't think it's there, by the way, because gold does oscillate versus Bitcoin in terms of its correlation, right? So this isn't by any means, until this is like correlated for 6 months, then we can have a different discussion. But it's showing signs that in the future it could. And that's enough. We don't need it to be correlated for a year. That's enough to give the market some security, at least in the short to midterm, that, things could be different for Bitcoin. And we know this cycle is very different because, of the ETFs. One really interesting point is that the ETFs have actually been outflowing net. We saw some inflows, which is good. It signals that retail is starting to buy Bitcoin potentially as a hedge off the back of this narrative recently. But we've actually seen negative inflows into rising price for Bitcoin. What this suggests is that retail interest overall has actually been declining, or we've seen an unwinding of that, Trump Bitcoin trade with the retail selling Bitcoin. But because price is rising, whilst ETFs have outflows, that suggests that there is smart money funds or whales, so big players that are actually accumulating Bitcoin. Otherwise, how would you have ETF outflows, so net selling, whilst price is going up? So, the Michael Saylors of the world, sovereign nations, big funds, these are the types of players that have been buying Bitcoin and propping price up. And today was the first day that we saw the ETFs start to adjust to Bitcoin, because we know, they're very reflexive to price action. When Bitcoin goes up, there's more retail inflows and vice versa. Retail, who's the main market of these ETFs, is extremely reflexive. So we've seen the first trend breakout of the year on Bitcoin, the first confirmed breakout. Now, the only bit of caution I'm going to issue here on the short-term case for Bitcoin, although structurally all of these developments are very bullish, is that we are technically heading into resistance. So getting all amped up on this huge decoupling narrative into resistance probably isn't my, cautious framework here. Obviously cautiously optimistic. Very much want to believe this could be the propeller for us to go back to 100K, but you still have to be a little bit careful because the environment is very shaky. Luckily, if you've been watching my videos, I talked about how I was buying super heavy at 75K. A week ago, I said that the Bitcoin bottom was in at 80K. I said 2 weeks ago when Bitcoin was, 70 odd K, that I'm buying Bitcoin and crypto now. Everyone is wrong. And since then, even a few days after that, I said I'm scared, but I'm buying Bitcoin. Here's why. All of those buys are now substantially up. So if you have been watching the channel over the past couple of weeks, even though retail interest is clearly down, I think you would have done really well. I think we've navigated this market quite well. But to give you an update on my feeling in the short term, I am closing some of those positions and already have, especially the equity side of things, and some Bitcoin. But I'm a little bit, more aggressive with keeping more Bitcoin than I am, equities right now. So I'll wait a few days to see how this plays out, but I'm not getting crazy bullish. I'm not opening new longs here. What you could look to do is on the low time frame, look for some continuation longs. Now, the other thing that you can do is keep an eye on the altcoin market, because we have an interesting setup at the moment where Bitcoin's decoupling from the S&P, but also altcoins are putting in a bit of a triple bottom formation right now. Now, triple bottoms are historically bullish reversal signals, meaning we could see continued relief on alts. That's just what the charts are suggesting right now. And because of that, I'll blow up the chart for you to make it even more obvious. This is the others chart. Because of that, because we have this combination of the Bitcoin breakout alongside a triple bottom for altcoins, I am looking for opportunities in the market, because the altcoin market's been massively oversold. And although I don't think this is a confirmed reversal, and as I said, things are probably going to be choppy over summer, been saying that for some time, there are definitely some trading opportunities that are going to come from this Bitcoin rally. So even if you don't buy Bitcoin here, if it keeps sustaining its rally to 90 to 95K, alts are going to perform really well during that environment. And there's going to be lots of trading opportunities where you don't necessarily need to be positioning 12 months out in altcoin trades, but you can be receptive to longs, which is why I don't really understand why people are logging off right now and getting bored when we're seeing a triple bottom on the high time frames on alts coinciding with a Bitcoin breakout. Like, isn't this the time to be paying attention for potential long setups, at least long continuation setups? I mean, fart coin's a great example of this. This has been one of the leading coins for mindshare, and it's pumped to over $1. If you're in the Mars High Club and you're following Paradise's channels, as you should be, he walked you through a trade that went from plus 200% to plus 300% to plus 350%, and then he closed out at plus 530%, which is an absolutely insane trade. So if you're in the Discord and you're taking advantage of these opportunities, we're giving them to you. So even in this market, there are lots of potential trade setups. He even took a Bitcoin short yesterday, which he ended up closing for break even. So all sorts of trade ideas happening in Paradise's channels, all sorts of trade ideas happening in Morin's channels as well. And the amazing thing that we have now is the Traders Hub. So if you want to feel like you're part of a community who trade together and support each other, if you go into the Trading Talk channel, everyone's trading together. We have our top analysts posting trades as well all the time in our talent analysis channel. These are our top talented traders that get promoted from the general channel to the trading channel. And then we have our analysts constantly interacting and giving feedback on setups. You can see Paradise in here talking to people, Morin here talking to people, walking them through trades all day. Like, name another community where you have professional traders constantly interacting with the community all day. This is the easiest way to level up, by the way. If you want to trade, even if you're crap at trading, just get in the Trading Talk channel, post some charts, and get feedback from our mentors. And especially in a market like this where there actually is opportunity, especially on the trading side, you know, investors hell, traders paradise right now, pardon the pun. You know, now's the most plus EV time to be doing this versus, you know, longer term stuff. That's the other alternative, which I, you know, cover more of that side of things. But our traders are absolutely amazing. And yeah, the Farcoin trade was brilliant. But it's only in this market where you can even be a little bit more receptive to stuff like that, just given the mean reversion that needs to happen on a lot of alts. So to summarize the video here, although it's not a conclusive decoupling, it is a very powerful psychological thing that's happening with Bitcoin running alongside gold. I think long-term it has very positive ramifications. Chart-wise, Bitcoin looks good. And relating that to altcoins, it's a good setup in the market right now to, at the very least, be paying attention, which obviously we're doing every day in the Mars High Club, and I'll keep you updated with these videos. Like yesterday, for example, I did a video on the 4 altcoin ecosystem everyone is sleeping on. Even though the market's boring, these ecosystems have continued to print profits in the market, and there are opportunities there for 2 different major airdrops of 2025. So if you want to watch that, go watch yesterday's video. Views are down across the board in crypto, but we're not slowing down the alpha on this channel at all. And I want to remind you again, if you do want to win potentially 1 Bitcoin by spinning the wheel, you could also win $1. You're not guaranteed to win a Bitcoin, but if you want to win a big prize here, sign up for Weex, spin the wheel, and claim a very, very nice sign-up bonus. Non-KYC, which is also handy. I'll see you in the next video. Have a lovely rest of your day. Catch you later, guys. Peace out.